Hello, and welcome back to Coin Lady channel. In recent weeks, the cryptocurrency market has slowed down significantly. There are, however, major events tomorrow that could affect the course of the market. In this video, we'll take a closer look at these forthcoming happenings and the major methodological divide between XLB and XRP. These two initiatives aim to revolutionize our financial system, but I've seen two key differences in their approaches. In the first section of this presentation, I will explain why I think XRP's method is the best way to build a new system. Focus closely on today's video, because we'll be discussing XRP's prospects, which you won't want to miss. In order to ensure that you never miss an upload, new subscribers should activate post alerts by clicking the bell. Keep in mind that this is not a video offering financial guidance. To kick things off, I'd like to highlight a key difference between Ripple XRP and the current state of the cryptocurrency industry as a whole. XLM is a key component in this change. A system where stable coins are suddenly very popular. With the recent launch of multiple new stable coins, Bennett's blockchain has seen a dramatic shift in its primary use, especially with regards to transferring SDC. There is a major push in the cryptocurrency market right now to produce stable coins. It's interesting to see the relatively slow growth of stable coins on the XRP blockchain. The majority of dependable coin development has taken place on other blockchain systems. After giving this some thought, I think I've figured out why this is happening. The primary reason is that Ripple's vision for the XRP ledger is fundamentally different from the goals of other blockchains. The latter typically adopt stable coins with a private network of nodes. These stable coins are supported and represented by a select group of companies to ensure their continued stability. Examples include the USDC's connection to the Circle and the Tether stablecoin. Stablecoins like Tether and BUSD, backed by Bennett's, are essentially backed by corporations. While I agree that this technique has merit, I do not think it will prove successful in the long run. My reasoning is based on the fact that eventually countries and significant private organizations would want their own unique currencies. As an example, the United States is more likely to favor a fiat version of a stable currency that represents the USD directly, as opposed to a representation by Circle or Tether. The same logic applies on a worldwide scale. Countries would rather mint their own stable coins than adopt a private company's version, which could compromise national security. Like Bank of America, other financial institutions would be wary of adopting a stable coin connected with a private corporation due to the high risk such a move would bring to their business. Most businesses and governments would consider it inappropriate to put their faith on a private company like Circle to make sound judgments on a consistent basis. On the other hand, the Ripple strategy entails luring financial institutions into creating their own fiat currencies on the XRP blockchain. While Circle and other such organizations promote the use of their established stable currency, this strategy departs dramatically from the usual. In order to maintain control over the value and backing of their stable currency, Ripple is encouraging banks and institutions to build them on the XRP ledger. Ripple just offers the technical framework to make the stable coins possible. When it comes to the core goal of ownership and control over national currencies by national institutions and multinational firms, I find this method to be vastly preferable. Each country will eventually have its own CBDC, or tokenized currency, backed by its central bank. Additionally, banks like Bank of America and JP Morgan will need their own proprietary currencies. Ripple, through the XRP ledger, offers this fundamental infrastructure for institutions to build and define their value, but these organizations may not wish to build the entire blockchain infrastructure themselves, given the existing accessible blockchains. While Circle, as an example, is giving these organizations value and encouraging them to use a taboo coin that has already been developed. I don't think the circular strategy will win out in the end, since governments and institutions will always want to keep a tight rein on their fiat currency. This outlook agrees with my prediction of this trajectory's most likely outcome. London is the financial hub of Europe and the largest FX trading hub in the world, and Ripple's recent emphasis on having a substantial presence there lends credence to this idea. Because of its central location as a center for the financial industry, home to numerous banks, investment firms, and foreign exchange, forex, brokers, it is of paramount importance. Given that the London forex market is responsible for more than 40% of the daily trading volume in the FX market, making it the most liquid market internationally, Ripple's decision to establish a presence there is a major one. Ripple plans to use this space to tokenize different types of value for governments and the world's top financial institutions. Ripple is trying to persuade these organizations to use its stable coin. Instead, it proposes to help them build stable coins that replicate their local fiat currencies, with the XRP ledger serving as the backbone for the transfer of these coins. I think this tactic has the best chance of success. The fact that Ripple's has worked closely with these organizations for a long time behind the scenes lends credence to this view. While most of what I've covered here is based on my own theoretical speculation about the future, it makes sense in light of Ripple's long-term strategy, which aims to ease rather than forcibly transform large institutions and countries into the next generation of the financial system. This comparison and these methods fascinate me. Ripple's strategy stands out to me because I think it has the best chance of being implemented successfully. Let's shift gears now and take a look at a fascinating event that will take place tomorrow and might have a major impact on the market's trajectory over the next few months. With regards to the Bitcoin Spot ETF, U.S. Securities and Exchange Commission (SEC) Chairman Gary Gensler reportedly denied Bitcoin Spot ETFs before the expected denial date of about October 7th. This initial rejection was very likely tactical. In a hearing scheduled for tomorrow, Gary Gensler will explain his reasoning for approving a Bitcoin Spot ETF. It appears he wanted to get this issue out of the way before being questioned by Congress, so he moved quickly on the denial. Significant progress is being made in Congress on issues relating to cryptocurrencies, and this upcoming discussion will have far-reaching implications for the Bitcoin industry. What makes this situation even more intriguing is that members of Congress from both parties have recently written to Gary Gensler asking him to speed up the establishment of a Bitcoin ETF. Given the current lack of positive momentum in the market, this development carries a lot of weight. There haven't been any noteworthy changes to the market to energize investors and traders. The market might receive a significant infusion of liquidity if Congress's call for a Bitcoin Spot ETF is granted. Bitcoin would see a stampede of institutional investors as clients and regular customers pushed for diversification. As a result, these massive establishments would have to buy Bitcoin on the spot market. When money flows into Bitcoin, it often ripples out to other cryptocurrencies. The next bull run can't begin unless we get this kind of bullish stimulus. Long periods of sideways trading have defined the current market situation. The lack of interest and enthusiasm among market participants, especially speculative traders, is my primary concern. In my opinion, a congressional push for a Bitcoin Spot ETF is a potentially market-moving factor that might revive investor interest and bring in the next expansion phase. The SEC's propensity for delaying decisions in this matter has kept us in limbo for far too long. It would be a huge step forward, however, if both parties in Congress put pressure on Gary Gensler to adopt the court's position and approve the Bitcoin Spot ETF. Even if Gary Gensler gives in to the pressure, it will be a welcome change and spur him to action. The outcome of tomorrow's hearing will reveal how likely it is that this ETF will be approved and what kind of effects it could have. I have no doubt that this new venture will infuse substantial capital into the market, propelling us to the next stage of expansion, whether it takes a few more months or a year. If something interesting happens tomorrow, I'll be sure to let you know right away. I'm hopeful that tomorrow will bring substantial progress rather than another anticlimactic turn of events, and I'm currently encouraged by Congress's increased focus on cryptocurrencies. The end of the show for today, fellas. How do you feel about XRP? Participate and tell us what you think in the comments section. If you enjoyed this video, please show your approval by giving it a big thumbs up. Additionally, if you want to be notified the next time we release a video on the newest XRP and cryptocurrency news, make sure to click the subscribe button and turn on the notification under this video. See you later, bye.